Welcome back. You're watching HFO-TV, co-sponsored by AMF Capital, the Baljanik Law Firm, the Butler Exchange Group, and the construction firm J.R. Johnson.
Welcome back to HFO-TV. I'm Greg Frick, partner of HFO Investment Real Estate. And today we're going to interview one of our brokers here at HFO, Lee Fehrenbacher. Thanks, Lee. I think we've had you on here before and discuss a little bit about kind of the market he covers and kind of the changes we've seen in the last few years. So, Lee, thanks for taking time out of your busy day to sit down and maybe give a little rundown. How long have you been with HFO and kind of the market you cover?
I've been here for a little over 5 years now.
Okay.
And I specialize specifically in kind of close in east and west side Portland, new construction and development and land.
Since that kind of is the hotbed of construction and development, it's been the close-in market.
Yeah, definitely. And then land, of course, for new development.
Gotcha. Then before that, you were a reporter.
I was a reporter. I worked for the Daily Journal of Commerce for about 3 years prior to joining HFO and other various newspapers before that.
Okay.
I covered the real estate and development beat for the DJC. And
I think that's where we met. I think we met. You were doing a story on some development or a couple of transactions we were involved in, and
that's right.
Yes.
Yep. Yeah. And so it's kind of a natural transition for me. I covered the real estate beat here in Portland and was very familiar with kind of what was going on. I was writing articles about it every day, and real estate was always a passion of mine, and it was a natural move to kind of step over to HFO.
So now you've been kind of immersed in this for 5 years, longer than that because of your reporting background. Kind of, what are you seeing? We hear a lot about IZ, inclusionary zoning. I mean, what have you seen in terms of valuations? Maybe we'll talk about land first and permits. I mean, are you seeing changing in land values that went into effect? What was it, February of 17?
Yep.
What's kind of maybe give a little. What's going on there?
Yeah, I mean, I guess I would say there's been a huge change since inclusionary zoning went into effect in 2017, like you said. We had a huge amount of projects that were pushed through the system to kind of get grandfathered in, right. And it was always questionable how many of those were ever going to see the light of day. We're kind of reaching the end of what that grandfather period is, typically about 3 years, and we're kind of approaching that point now. And so a lot of projects are timing out. And
right, so they had a 3-year window. If I went and got my pre-app, and again, it wasn't you didn't have to get fully approved on your full plans, but if I got a pre-app in, pre-IZ of January of 17, I think I had 3 years to actually pull permits.
Typically speaking, right. I mean, I think there's some fudge room on that a little bit, okay. But yeah, typically speaking. And so we had a huge amount of deliveries leading up to 2017, and we've had some of those projects continuing to deliver after that. But since IZ went into effect, our development pipeline has pretty much fallen off a cliff. And, I think the result of that is, in the next probably 2 to 3 years, we're going to see our market get really tight again from a supply standpoint,
right.
And which is going to have a big impact on the demand for housing, potentially rents going back up again, and values as
so
well.
With the slowdown in terms of new permitting, are you seeing land values? Somebody that's got a land piece for development that they, looking at a value from 2-3 years ago.
Yeah.
I mean, what are we seeing on land values? Because the other cost that's gone up is hard costs in terms of construction and labor.
Construction costs are up significantly.
Right.
You talk to any builder, developer, they'll tell you the same. And with the new restrictions that inclusionary zoning put on projects, a lot of developers are having a really hard time making projects pencil. And, as a result, the amount that they're able to pay for land has fallen off pretty significantly.
Right.
And so we've seen a big reduction in land prices and, quite frankly, an appetite for land.
Well, and some of that I think has to do, we talked about, is the construction costs in terms of labor, materials.
And right now, it's a little bit, we have a little bit of an oversupply of units, and rents across the market have begun to soften a little bit. We're seeing concessions pretty consistently. And
predominantly the market you're covering, the close-in core.
In the close-in
right.
market, for sure, yeah. And so, that coupled with, the rising price of construction and, some of the other market drivers, it's kind of a unique time right now where land has been the biggest recipient of some of those changes in terms of a lowering in value.
Right.
Yeah.
The other thing interesting I've seen is you've got You've got certain areas that have overdevelopment, and you have some that are underdeveloped. And the question, one of the things we talked about with IZ is, which it's kind of hard to track, is how many sites out there that could have handled more density. Because again, in IZ, for people that don't know, if you're over 20 units, you're part of IZ. If you're under, so if you've got a land site that could do 30 units, it may make sense to just do 19 from a purely financial standpoint. But again, that's not helping the supply issue, and so.
Yeah, I think without a question. I think that a lot of projects out there that are under 19 units would have certainly had more, maybe 30 units if the IZ wasn't a factor. But it just doesn't make any sense to include that affordable component from an ongoing operation standpoint. And so most developers, at least that I know, would opt to just cut it off.
And so are your developers then looking for outside of the Portland market for opportunity just due to some of the restrictions?
Yeah, sure. There has been that's been a recent change as well. People looking outside of the Portland city limits for new opportunities, markets that are kind of also experiencing some of that growth as things have heated up here in the core. They kind of push outward. And so I think we're seeing a lot more development or interest in development in some of our close and suburban cities.
And then some of your kind of existing owners, what are you hearing in terms of, what are their concerns? Or, we all know Oregon's the first state to get statewide rent control. Portland had some other stuff ahead of time, relocation fees. What are your clients telling you in terms of looking at that crystal ball looking forward?
I think the biggest concern is, how is our policies going to continue to keep changing? Right. Everyone is aware that Oregon has rent control now. Portland has its own rent control policies, and in March, a lot of people are concerned about the tenant screening ordinance going into effect, and just from making sure they understand how it works and making sure that they're in compliance, and kind of just the overhead costs associated with that is very concerning. But from an ongoing standpoint, are these rules going to change dramatically down the road? And so, that's anyone's guess. I would say.
Your clients are still interested in coming in. You're not seeing a flight of capital. We originally kind of talked about maybe we would see more capital not coming here with some of the regulations, but it's been interesting. I've not, my clients say the same deal. We haven't seen a lot of capital saying that. Maybe a few that say I don't want to be here anymore, but we still have influx of capital coming into this market. Yeah,
for sure. And I don't think we've seen any kind of adjustment on value as a result of any of these policies going into effect. And I think part of that has to do with, we still have a significant interest from capital in the California markets that is looking to Portland to reinvest. And they're coming from markets that, when they're coming from rent control markets already. Right. When they look at our rent control market, it's kind of a rent control light. So it kind of pales in comparison to what they already are used to. And so I'd say a lot of the heartburn in terms of our new policies and how to manage them has been felt by local owners, long-term owners who can look in the rearview mirror and remember a time when it was a lot easier to handle their building, but for outside capital hasn't been a problem.
Yeah, and I think the one where you've seen an adjustment in our end is looking at, together, it would be on the add value play, where you have now an added cost on the add value side. So, new construction's exempt. 15 years you're exempt from anything, but on the add value, there is an added cost. So I think performance changed a little bit, but like you said, it hasn't been a mass exodus of capital out. And there's been so much capital looking. I think that's kept values and the cap rates, have stayed where they are, if not even gone down a little bit because of interest rates. But
it becomes a factor for buildings that say the owner has fallen behind on keeping their rents up to market rate. Certainly that anyone, if they were looking to sell that building today, anyone who was looking to buy it would be constrained by what they would be able to increase the rents over time. But for buildings that are more or less kind of close to that market rent, it really hasn't had a big impact.
So what's your crystal ball? You already kind of said with the effect of IZ, the effect of construction costs, supply is not going to keep up with demand.
Yep.
As we continue to have immigration on a job growth and population growth, is your feeling that we'll continue to be a viable investment market and because of that, we'll be undersupplied again?
Yeah, I mean, that's kind of my personal prediction, is that, we're going through a little bit of a hiccup right now where we've got a lot of new construction deliveries,
Right.
a lot of new units on the market that are competing for a limited pool of renters. Once those fill up, there's really nothing in the pipeline to kind of keep up with the constant
The ongoing
immigration that
demand,
we're seeing.
right.
We're still one of the cheapest big cities on the West Coast, and I fully anticipate that in probably 2 to 3 years' time, we're still gonna be have a housing shortage in Portland, and I guess if you own an apartment building in this market, when that happens, you stand to benefit.
Yeah,
For
no,
sure.
yeah, I think it's just a matter of, I think like we talked about, I think a lot of the effects of the legislation, it's affected a lot of the longtime owners here that have just kind of said, hey, I didn't get into the business to kind of have a target on my back. I think you still have capital looking for yields, and we're a viable market for that.
Well, yeah, and on that same note, I mean, we have seen a lot of owners who have been here a long time starting to look to the surrounding cities. Right. Selling their close-in East Side asset and moving to, say, Milwaukee or Vancouver. We've seen a pretty dramatic increase in values in both of those cities over the past year even. And so, that's been really interesting. And that, I think a lot of that has been motivated by just kind of the political changing environment. And
Just the added cost, I think, of doing business within the city. I mean, there's an added cost within the state, but I think the city has an extra layer.
Yep.
I think if people have a choice, they may look at other options.
Yep.
Especially,
Yeah, I agree.
Well, good. Well, thanks for taking the time to speak with us. I know you're a busy guy, and I've got clients to service and people to talk to. So thanks again for coming to HFO TV, and we'll see you next time.
You got
at
it.
HFO Investment
for having
TV.
me.
Our entire office specializes in multifamily real estate, making HFO the largest multifamily brokerage in the Pacific Northwest. Your success is our passion. Build your legacy with HFO. Call 503-241-5541 or visit our website at hfore.com for more information.